Welcome to the Real Estate Show on KMED, September the 19th of 2015. Pete Belcaster and Joe Brett, the real estate guys with you. We're both real estate brokers with John L. Scott here in Southern Oregon, and we get together with you, once a week here on KMED to talk about all sorts of real estate-related activity. I think this is our 301st, real estate show, Joe, today, and over 5 years worth of this. You think we'd have the market down by now, that we could predict. We could tell you what's going to happen, but it doesn't work that way.
I can't tell you a thing about the market.
It's the most fluid thing I've ever seen. Sellers right now, have the advantage.
Yep.
Sellers do.
Inventory's down, prices are up. There's supply and demand is all in their favor. I've learned to just sit back and let the market tell me what it wants to do and what it is. Instead of trying to decipher it.
Well, when sellers are getting close to 100% of their asking price, that's the seller's market. There's no question about that. Well, to make all this system work, you got to have loans. And who better to talk about that with us today in the house than our good friend Guy Giles from Ditech Mortgage is here. And Guy, nice to see you. I assume that out there at the airport, where you have your office, that things are going pretty well, right? I mean,
about 13, 14-hour days this week, so it's been it's been crazy.
Guy's got a nice office, and he's got
out there.
He's got a view of the flight paths coming into the Rogue Valley International Airport that I would die for in my office.
I think he sits out there all day, talks to people, and writes mortgages.
I'd be watching airplanes. I wouldn't get anything done.
Well, tell me what you're seeing first of all here. Fall is almost. Summer's almost over here. It's been an amazing summer.
Well, obviously, we had some pretty favorable news come from the Fed when they talked, so they're not raising rates right now. And I don't think they're going to for a little while. They're not talking into the microphone. So I don't know. Rates are still doing great, and for the foreseeable future, I think we're going to do all right.
Well, all those people who told us, rates are going to raise, Joe. Rates are going to go up. Mortgages are going to go up. They have not. In fact, they're holding their own, if not dropping. Cheryl Malone is a real estate broker with Windermere. Has been on our show before. Cheryl's with us today. Nice to have you here as well, Cheryl.
Oh, thank you.
Do you see the same thing? It's been quite a summer, hasn't it, in this market? You've been involved with it for a long time. What do you think of this?
Well, yeah, it's definitely a seller's market, and the buyers are having to make a lot of decisions on whether to buy and whether to pay those kind of prices. But in the long run, it's certainly a good investment still with the interest rates are what they are.
And people are still moving here. What are you two seeing in clients that you work with, clients that come into your office? Who's doing this? What are you seeing?
Where are they coming from?
Where are they coming from? What are they asking for? What are they looking for right now? In your opinions that you see in your experience?
Well, actually, a lot of people are coming from California. When I think you look at the statistics, it's not necessarily as many people from California as you think, but it sure seems like that here in Southern Oregon because it's close but yet far to California, so it's quite convenient for them to still be involved with the California relatives and things like that. So
they want to be within.
Plus, they put little signs on their real estate signs in Portland that say Californians are not welcome. Please don't move here, and that probably doesn't help their cause. But we welcome you here, and we have a beautiful place that's not as weird as Portland to move to.
Well, that really brought that up. That created a whole big stink in the Rose City over that. Of people ability, I guess it's free. I guess it's free speech and people can do that. Yeah. But that really created a big stir, in the state, a lot of memories, and I hope we don't go down that road again.
Oh well, because we'd be in a bad place if we did.
Look at what's driving it here. It's Californians coming up here. Are they all retired? Are they people coming up for business, or what are you seeing there?
Well, most of them are actually retiring, selling their homes up there and coming up here and finding the lifestyle and the weather very accommodating to them.
Well, we've got 10,000 baby boomers a day retiring for another 18 years, and so it's the retired that are coming here. All right, we've known that too. So this should not be a surprise to people.
And one of the reasons for that is we saw this article in the Tribune this week is the disparity in wages of the high end and low end incomes, and we've got this huge disparity in the valley. So only retirees pretty much can afford to move here unless you're an entrepreneur that can do your business online and you got all that going for you, or otherwise and not a lot of incentive for young families to move here or to find
before you go down that road, though, you have to look at those affordability indexes. And Jackson County we're still okay. We are not what it was in 2005-06. So the affordability-wise has not been an issue yet, Joe, but it will. And we have the assessor coming in here, in a few weeks, and we're going to see what they're going to be raising, though. What value? How much did the value increase in Jackson County in 2014?
I guess 25% last year.
Well, it's going to be double digit again, and what is that going to do to the market? So there's a lot. I mean, all the rosy part we talk about, there's still other things out there. But back to interest rates, Guy. What's coming into your office today? What are the rates today that for the different loans that most people are aware of that are out there?
Well, if you're doing a conventional loan, we're still, in the high 3s to the low 4s, just going to kind of depend on your credit score. Believe it or not, Fannie Mae's been pricing things lately to where you actually get a little bit of a better rate coming in with 5% down than you get coming in with 20% down. As crazy as that sounds.
That really does. Say that again. Because, okay.
I think I always try to go back and figure out the root cause of something, and I believe that it has something to do with the mortgage insurance. Because you're paying mortgage insurance, the investors must feel like they are being backed a little bit more, like somebody else has got some skin in the game on these, where they don't really pay for anything more than that, between the 20% and whatever you borrowed. But it's been really bizarre to watch these rates. It's been happening for a little while now, and believe it or not, the higher loan to values sometimes have on the conventional loans get a better rate.
That's really something, isn't that? When you're talking people, what is that the main thing that they're getting right now? Are conventional loans from you, or what type of loans are people who are seeking right now?
I've been a VA magnet the last 2 weeks. I think I did.
That's so weird.
I think I did 3 pre-quals in one day last week that were all veterans. So I did another one this morning, and there's a ton of people that are moving up here that are vets. So I'm seeing a lot of those. And
of course, if they move here, you can take the VA with you. When you and you can use the VA loan as many times as you want, as long as you're owner occupied of those properties. Correct? Is that right? Okay.
Yeah. The big thing you want to be careful of if you they are one of the rare assumable loans out there. So if you have somebody else that comes in and assumes your loan, that guarantee that they use, the reason that you don't have to come in with a down payment on a VA loan, that's still used on your old house. So you have to just kind of be careful of that if you're going to go get a second VA loan. Now, if that loan gets paid off, then it's no big deal. You're back to square one. So it's still by far the best loan out there. I actually had a guy. One thing that people don't know is if you've been in the reserves for at least 6 years, you're eligible for a VA loan. And he'd been in for 17 years, a guy that I met with this afternoon, and had no idea that he was eligible for a VA loan. So it was...
What a benefit to him, man.
Yeah.
And those loans, they're earned.
Yes,
by
absolutely,
those veterans.
Absolutely. Yeah. We love helping vets. We actually give a gift card after we close to all of our veterans.
Well, my son, Mark Belcastro, got his first house. He got a VA loan down in Texas, and is thrilled for his first house. I mean, I have to say, I didn't think that would ever be.
Did his time in
happen, but it
did his time in Baghdad for that VA loan. But that's what we're talking about.
And a VA loan for young guys and girls like that is fabulous. Yeah. What rates did you quote the VA? I mean, in the VA loans that you're talking about?
Mid-3s on those.
Mid-3s.
So yeah, it's just like on all the government stuff. You're a little bit, maybe a quarter to 3/8 lower on rate. Just as a rule, again, when I say mid-3s, it could be 3.5 up to 3.75 depending on credit score. Oh yeah, no, all day long.
Is there a high point in the loan? Like USDA loans, you can only go so high, or FHA will only go so high. What is the restrictions on a VA loan?
You're still going by the conforming guidelines. So if you go above the $417,000, you have to have 25% of whatever is above that $417,000. So you have to have 5%. So you have to have a little bit of a down payment if you're coming in with what would be considered a jumbo loan. But it's still so much less than that.
$500,000 home on a VA loan for $2,500 down.
For $1,000.
$25,000.
Roughly.
Right, sorry.
I've been up early, so I can't do the math in my head.
Math was never your strong suit either over there. So
Ask Sister Mary Jo.
Yeah, that's
I can say
probably
her.
true.
Long way
Okay,
from
what
the
about
First
USDA
game in
loans?
the
Those are
majors?
also 0%
You
down
don't know
loans.
about? Because
Cheryl,
this family is
God, you
enjoying
see
a
people
cross-country
still
baseball
using,
stadium trip
your-
they
your
planned
clients
online
using
at
that?
AARP.
Because I haven't heard much
It's
about
where your journey
USDA lately.
begins with
No,
inspiration,
we're not
planning,
doing-
booking,
I haven't
and
done
hot
the
travel
USDA.
tips from real pros. If you don't
month.
think seize the trip when you
Yeah.
think AARP,
And it was a
then
good
you don't
course
Is it
for
funded?
what I was doing.
Find more surprising
Yeah,
possibilities and
it's
get
not
to know
really
what's
what the
at
issue is. I'm not having people.
AARP.org/possibilities.
Believe it or not, the young people are coming in with a little bit of a down payment. Now I have Brooklyn, a girl I used to work with over at Chase Bank. She just got out of school, and she and her husband just bought a house last week, and they have a down payment saved up. They're ready to go. And, if you play your cards right and do things the right way, first-time homebuyers can still get in and get something good, but you don't necessarily need to do that. USDA.
Well, that's always good to know. And FHA loans, okay, let's talk about those for just a second, because we know FHA is also changing the way they appraise FHA homes effective now, which we have a show coming up in that later on about appraisals in this issue, because some appraisers are going to say they're not going to appraise FHA loans. So there's a whole bunch of issues out there that are still fluid with this, and it's going to affect FHA loans. So tell me what FHA is doing today, Guy, and are you getting any of those?
FHAs, we are doing some of those since they lowered the mortgage insurance on that about a year ago. There was probably about a 5-page change to the FHA loans. So that's something that lenders are going to have to be a little bit careful of over the next little while we kind of digest all the changes that they did. One of them, like the gift funds, where you can do you can do 100% gift funds on that program. They say it can be from any family member but a cousin. And I don't know if someone's it's all these little random things, and they've changed it up quite a bit. And that's actually something that I can bring some notes on, and we can talk about
Interesting.
a little bit more. But they changed a lot of things on the
Dude,
FHA.
I have really good cousins. What's the problem?
I don't know. Somebody did something wrong, and
I
they were
don't
mad at their
I don't know
cousin.
if any of them would gift me, but yeah.
So you're not doing mortgage insurance anymore on FHA loans, correct? Or tell me what that status is, because that was a big issue not very long ago.
No.
Remember that?
They still charge it. They just cut it down.
They cut the percentage down.
Yeah,
okay.
They cut it down to 85 basis points where it was 135. So it's a ton cheaper than it was to do one.
See, they went down with that. I wonder if, because USDA, raised their fee from 2 to 2.5%, I wonder if that has had some effect of people not able to do that. It seems like it wouldn't, but it's not. I mean, I'm sorry to hear that you're not experiencing any. Cheryl, you've seen any USDA loans, because those are rural loans in rural communities that need those types of
No money down, yeah.
No money down loans that income qualified. Remember that, but I'm surprised to hear that you're not seeing much of that anymore, because we used to see a lot of it.
It's outside the city limits of Medford and Central Point. Yeah, you're eligible. So
Cheryl, you seeing that? What's going on with that, you think?
Well, it seems like most of the people wanting to go USDA are younger people who don't have, are not able to save for a down payment and don't have anything for closing costs, so they need, all the help they can get. Unfortunately, the price range that they seem to qualify in or for is those properties don't exist. So
the properties aren't there.
The properties
are
not there.
Yeah.
Mm-hmm.
There are income limits.
A couple
on
years
that
ago,
program.
Yeah.
A couple years ago they were, and they're gone.
Well, we've sold in since we've been doing our show again. Look what has sold over these last few years. A lot of properties have sold, and those types are not being replaced. That's a good point, Cheryl. Mm-hmm. I've not thought of that way, but that makes sense. And that's a scary thing, that we're out of properties maybe like that people would
where those homes
places.
under $250,000 dominated our sales for a few years there, and
on the other hand,
that corner.
People may be staying in them a little bit longer that they're in them now. I mean, that's a possibility too. So what do you think, we're up against a break here in a couple of minutes. What do you think is the situation? It's such a seller's market right now because it's supply and demand. Inventory is down.
Inventory's slowing.
It's slowing even. Cheryl, what do you think of that? You concerned with that? What do you think will happen over the winter?
Well, actually, I've been the busiest during the winter time. So
winter is a good time. No, winter is an excellent time actually to buy and sell.
Exactly.
People don't realize that, but generally it doesn't happen. Mm-hmm. Yeah.
Well, you get most of the serious buyers are out there in the wintertime, and the serious sellers keep their houses on the market. So So I think actually the wintertime is the best time to be looking, actually. Because come springtime, people want more money and you've got more competition and things like that. So hopefully they'll get a little more inventory and,
Well, there isn't much inventory now. So as a result of it, all the way around in our market, whether it's rentals or selling, the pressure on prices is what is really concerning.
I would assume we'd. Oh, sorry.
No, go ahead.
I would assume we'd probably see this kind of trend going for the next few months, and then everybody will go into the summer thinking, okay, now I can get a little bit more for my house, and you'll see a whole bunch more listings where people are maybe moving up.
Well, people think that because it's this way, that they could wait and get more, 5-6%, maybe more. I don't know. Is that a gamble? Is that a dumb gamble to make?
I don't know in this environment.
It may not be. I mean, we've had people, some clients, and say, you're better off not to sell right now and wait till the spring or maybe a year. It just depends what your situation is. That's why you need Cheryl, a good real estate broker, don't you? To help you along the way here, because it's not easy to do. We've got a break coming up for the Real Estate Show here on KMED, September the 19th, 2015. Pete and Joe. Hey, don't you dare go away. We're coming right back on KMED right after this. Real Estate Show continues here on KMED for September the 19th of 2015. Pete Belcaster and Joe Brett, the real estate guys, with you. Don't forget, you can go to our website at realestateshoworegon.com. You can watch any of our past real estate shows there. We got some good information on you as well. Just give you an update. I've got the Medford Elks building, Joe, for sale. And it's really, I still want to do a show sometime here this fall on preserving and repurposing buildings. But I'm just amazed at the interest that there is in preserving that grand old building downtown.
You had over 50 people stroll through for your open house down there a couple weeks ago. That really opened my eyes as to how much interest there was there.
A lot of interest in it. Anyway, today we're talking with Guy Giles from Ditech Mortgage and Cheryl Malone, a broker with the Windermere Real Estate here in the Valley, about interest rates. And we've heard so far that they're still in the high 3s, low 4s for just a general interest rates. And we talk so much about investing, with real estate here. And you guys really are encouraging people to get in the game. We see that it's not very much inventory, prices are high, but you both are saying this is a good time to get in the game. What do you mean by that, Cheryl?
Well, absolutely. With the interest rates what they are right now, even though you may seem to think it's more a seller's market, if you wait this time next year or even 6 months from now, the prices would be higher, interest rates may be higher. So the sooner you get into the game, if you want to say, the better you are. You'd be surprised the difference in, say, $10,000, $20,000 in a purchase price and 0.5% or 1% interest rate over the life of 30 years. How much money you're really saving buying today as opposed to waiting 6 months from now, and those variables have happened.
Most people would be, I don't know, you think, Joe, a little afraid to take that step to actually get into the game? I mean, what's the first thing what's the first thing you do?
Off the fence?
What's the first thing a person should do? I mean, I don't know myself. I mean, I don't know where that first step begins.
Well, actually, a lot of people are afraid to become investors or landlords, and it's not quite as scary as you might think.
Or put it in the stock market,
right.
Or real estate.
No, that really scares me.
Real estate's a lot smarter than me. Anyway, okay, go ahead.
Yeah. Well, they hear all the horror stories about being a landlord, which, if you're apprehensive to do it yourself, a good property manager will make or break you, and it's a fee that you have to pay each month, but it's just considered an expense like a trash bill or something like that. That's part of your investment.
And it's a business that you're running too.
Exactly.
That's one thing we've learned. It's a business. Yeah.
And I've had rentals throughout my life, and I've always kept the rent real reasonable so the tenants stay longer and you have less hassle. They're willing to pay their rent on time because they don't want to have to move because you're that they're paying top dollar. They find a house down the road, $50 less a month. But.
So you two are saying, if I'm reading you right, that a person should just get into a place. It may not be your first house, if that's what it is. It may not be the dream place that you actually want, but you're saying get in and make start that process. Then you can sell it. You can keep it. You could buy another one. Is that what you're advocating here and trying to get across?
Absolutely, yeah. If you you go out there, just get something, as close to what, you're looking for as possible, and, live in there 2-3 years, and you're getting in at low interest rates, today's interest rates, which will, stay the same for 30 years. You're getting in with a minimal down payment as far as owner occupancy. If you bought it as an investment, you may have to put 15 or 20% down, but if you get in, with 100% VA or FHA, 3.5% down, you're still getting the owner-occupied rates today. 3 years from now, you make it a rental and go find your dream home or go buy another one. You are now, locked into those rates and low, investment.
And you don't have a problem, obviously, in finding a renter.
No.
If you're
Exactly.
if you're going to rent a piece of property. Okay, Guy Giles, what are the interest rates? Say I want to do this. As an investment, do the interest rates change much for me if I'm going that route?
Yeah, you definitely need. Yeah, you definitely need a bigger down payment if you're
All right,
going to buy an
need?
investment.
Okay, what am I going to need?
About 15%, 20%. It's going to depend. I mean, some places 25%. You just honestly, you asked kind of what the first step is. The first step is just come in and sit down and talk, because you don't want to go out there and shop for $500,000 houses and then you get all excited and then you find that and you figure out that that's a $2,400 payment. So I think the first step is to come in and get pre-qualified.
But that's with not only that, it's with every loan that you ever want, right? I mean, if you're not, you're going to lose out. That's what we're saying. I mean, that happens. I mean, Joe's got the same thing. You got clients you show, you better be ready, especially right now in this market. Okay.
Yeah, another thing that's been working out really good for people is going in and having a builder build a house for them. That's kind of a good way to be able to get in the game. And a lot of times what they'll do is they'll appraise the house like it's already a built house. So you can walk in with some equity, right off the front. You will have to get qualified, for a construction loan and do it that way. But I know Brock is out in Central Point and he's building some houses that are really nice and he's letting people get in. He's actually financing some of them until the thing gets done and just kind of carrying the note until it's over. And he's building some good little starter homes right over there.
Is that in Twin Creeks? I've seen some of
Yes.
those. Yeah, they're beautiful homes.
Yeah. So it's a good way to go.
See, that builders are even doing some refinancing themselves a little bit. Interesting back into that market again, because that had dried up for a number of years, hasn't it? So, well, there's a lot happening. Again, the bottom line,
a lot of opportunity out there.
And we always talk about being market ready. Day one, whether you're the buyer or the seller. And it sure seems that, Cheryl, that's the case. You better, if you don't, you're just wasting everybody's time, including your own, is what I would think.
Well, people, when they look at prices, they'll say, I want to stay, at $200,000, and then they don't want to go up to $210,000 for something, if it's going to be a matter if they're going to lose it or not. I said, okay, the additional down payment may be only a few $1,000s or a few $100s difference when you do the, percentage to of your down payment to the purchase price. And that extra $10,000 may only be, $35 or $50 a month, whatever it works out to per month. So, you're going to lose out on something because you don't want to spend $50 more a month to get it now. And if you wait, it's going to cost you a lot more money than you think. And, 2 or 3 years from now, when you rent it, you'll probably be able to break even and have the renter, pay your whole mortgage for you. And
pay the whole thing.
And then now you have an investment and, you didn't have to put down that 15, 20, 25% down and have the higher interest rate.
And it's not in the stock market where the Chinese could implode and there goes everything I have.
Well, you have the appreciation that you're getting in the market, and then you have the depreciation and the tax write-off on a rental. So what other investment can you make where you're making money and able to write off it at the same time? And after 30 years, 20 years, you have all that built-in equity. And the way I like to look at it, it's a forced savings account because it's hard to get out. It's not like if you had, $50,000 in the bank, you'd probably go through that pretty quick, just, nickel and diming it here and there. If you have $50,000 equity in your home, it's hard to get out to go spend it. So it stays there until you really need it.
Yeah, well, I think if you bought today a $200,000 home and kept it for 5 years and it appreciated by 5% a year, at the end of that 5 years, you would have in equity now, you would have made $34,000 in that 5 years with that home. That's what you call generating wealth, and that's what real estate is really about. And remember that great stat, the average renter in this country has a wealth of around $5,900, and the average homeowner has a net worth of about $194,000. So that's the difference, Cheryl. We talk. I mean, with renting and versus buying it's generating wealth for yourself and your family and your security, and people do it in many different ways. Investing, like you do, Cheryl. You own rental properties, correct? Like you told me. So you're doing that. See, you how many agents do that? Because you're smart. You got to have revenue, and it's a service, and do you manage your own? I'm curious just about that. Do you manage your own, or do you have a manager do it for you?
Well, I have a lot of properties. I have properties in here in California that I do myself, and then I have some in Texas and a few other states that I have property managers for. Okay. But it's a great example is when I bought my first house. It was 30 years ago. I was 24 years old, and I between my payment and what the rent was, it was $200 less, and people said, "You're losing money." I said, "No, I'm not." I said, "I'm buying a house for $200 a month."
There you go, and that's what started Cheryl off on her road. We got a break coming up here on the Real Estate Show. We got to take a break. We're coming right back here. One more section with Guy Giles and Cheryl Malone. We're talking about interest rates today on the Real Estate Show for September the 19th. We're coming right back after this. Real Estate Show rolls on KMED, AM and FM for September the 19th. Pete Belcaster and Joe Brett, the Real Estate Guys, with you here as we end summer. It's been a long, hot summer in the Rogue Valley. Heading into fall this next week, and hope you're having to make something happen this weekend as well. I want to remind you, the Home Builders Association, the Tour of Homes coming up October 16th and 18th and 23rd and 25th. We'll hear more about that from Guy Giles in the weeks ahead.
Or probably from Brad Bennington.
I'm sorry, from Brad Bennington. Guy's going to finance it, I suppose, and that kind of
Guy's
thing.
going to buy an investment property on the Tour of Homes.
Next week here on the Real Estate Show, we've got two John L. Scott agents, Terry Rasmussen and Judith Foltz will be with us, and we'll talk about the market and their experience with that coming up next week. And at the Home Builders coming up, the county assessor, Josh Gibson, will be along for his yearly visit with us, and right around tax time. That's our favorite time of the year. Those property tax statements come out in your mail.
And we can ask Terry about coaching the Crater Boys basketball team last year, because he has quite an experience with that.
Terry's involved in a lot of things. He'll be here next week. We got today with Guy Giles from Ditech Mortgage and Cheryl Malone from Windermere Real Estate here on the Real Estate Show. We're talking interest rates today, and I just got to ask you, we've talked about people getting into the game, and of course it's the seller's market. We know that at this point, and as we go into fall, I'm curious, Guy, what about interest rates are people buying second homes? Are people buying vacation homes anymore, or are those just not happening? I mean, I'm curious just about that.
Well, tons of people are moving up here and buying second homes right now.
Second homes.
So,
okay.
they're maybe a couple years away from retiring, or they haven't got their house sold yet, and you can still get kind of the same rates on a second home as long as you're going to stay in it for a couple of years. A couple of weeks a year.
All right. So what is the difference there on a second home? Because you're right. If I want to go from here, I go to the coast and buy a place, right? I mean, over Brookings or somewhere.
Newport,
anywhere on the coast. Okay. What's the difference there?
Well, there's really not a ton. I mean, you're going to get the same rate that you'd get on a regular owner-occupied house. Normally, these people are coming in with a down payment, so you can't get in with as little as you would on a primary residence. Okay. But 10% down or so, and you're in pretty good shape on a second home.
Okay.
And there's a lot of people that are just coming up as long as they can qualify with both payments, buying the house. Then that way they have a good place to come vacation for the next couple of years while they're finishing off their job. And it's a lot of people we're seeing doing that.
I wonder if the influx from the south of our border, if they are buying if they're selling their properties in California, moving here and buying one, or are they keeping their properties there and buying? I guess it's probably a little of both, I suppose.
It is. Again, a lot of people just aren't quite ready to retire, but they are seeing the writing on the wall with where housing prices are going up here.
Buy them now.
Yeah. And that was actually another thing that we kind of wanted to mention. We talked a little bit about what might be a good topic, and I think a good thing to do is come in with your best foot forward when you're buying a house. Don't come in expecting what was happening in 2010 and 2011. Just putting a good foot forward, so to speak. Put your best foot forward, and that way I don't know. I've just seen people a lot less apt to want to negotiate on the houses. The sellers really feel like they're in control, and if you feel something's worth it, you need to go in with a good, strong offer. And that's why it's just such a good idea to have a good real estate agent like one of you three.
I got this client, Lowball Louie. I blocked his calls about 9 months ago. I just took him out of the game.
Thanks a lot.
Don't
I think you
call
gave
me.
him my number.
Well, you don't. Well, I think we had a deal where we wouldn't even write an offer.
Nope.
I mean, it's going to be rejected. Why waste our time? We don't even write the offer
and waste our seller's time as well.
You don't want to do that. Well, I even had a seller who had an offer on a full price offer and a VA loan, wanted the seller to pay all the closing costs, et cetera, and the sellers had several offers and decided I don't want to do that, and so sellers are being picky right now. They're being very, very. They're going to be more offers, and so they know that, and they're doing their due diligence and saying what's good for them as well. So it's really a very fluid. I mean, I guess the bottom line is today's. I guess if nothing else, is really fluid out there. The market itself is
some of those sellers are turning around and becoming buyers too because they're moving up and they've got some equity back and they're able to make some moves and make some things happen. Not coming from out of state, just some activity from our own locals.
Well, a lot of the people that ran into trouble with foreclosures or short sales, their time has elapsed now, so they're now able to purchase. So they're competing with the first-time home buyers, and then people are coming here to retire.
And then add to that the investment properties, the rental properties that we need, and you can see, and you got inventories that are down 18% from just a few months ago. So that combines, puts pressure on prices to go up, and again, so it's really a very fluid situation. And again, you got to be ready. If you're serious about it, you got to be ready from day one to go. You got to be pre-approved. You got to go see Guy Giles out of Ditech Mortgage. You got to find a good real estate broker like Cheryl around as well, or we can help you too, because you got to know this. Because otherwise, you're just wasting everybody's time. And that just there's nothing worse. Cheryl would say there's nothing worse when you have a client. This is the home they want, and they don't get it for whatever reason. And it's especially if it's something that they could have avoided.
Well, a lot of them get stuck on the price of the home. It's like, oh, that's $5,000 more than I wanted to spend. Well, and then they end up not doing the best offer that they can because they're stuck on that number, as opposed to, okay, if you don't get this house, what's your other options? It may take you another month or two to find the house that you really want. You may pay more for it at that time, and then meanwhile you've been paying $1,000 a month rent for the next 2 or 3 months. So now that's wasted money, really, the $3,000 you just spent on rent.
Sure, because you say you don't get depreciated or appreciated.
Exactly. So by paying $5,000 or $10,000 more for the house you really want, or a house that will suit your needs for now, is advantageous to do that, because you're just
you're almost paying yourself.
Exactly, and they need to understand that and put it in that perspective, because sometimes, again, they're just stuck on that price. Well, I don't want to go over $200 and it's $210. No.
Well, Cheryl had the line of the day. I mean, think about that. You said, where else can you have the opportunity to appreciate in value with what you purchase and depreciate it at the same time as your investment and make money both sides?
And a forced savings account, really, like I said.
Yeah. So you have your choice. You got the stock market right now, or you've got real estate. It's tangible, it's growing, and it's not going away. They're not making any more of it. I guess that's the bottom line, huh?
The other piece of it, if you're looking at the difference between rent and buying, is even if you're paying in the low 4s for a rate, by the time you get your tax benefits, you're probably really only paying $2 something for that money. So that's a third way that you're doing good.
Well, it's good to know that there's guys out there who help you like Guy with loans if you need them, because they're all out there, and now's the time to do it.
We got to work on my job.
Yeah, get that refinance done, would you please?
It's a wrap.
We're really good on that note. Well, that'll do it for the Real Estate Show. You can check out Cheryl or Guy. You can Google them, and they'll be able to help you as well. So thank you for being here today. Joe, we'll see you next week as well. John L. Scott, it'll be a Market Watch show next week here on the Real Estate Show. In the meantime, make sure you check out our website at realestateshoworegon.com or at YouTube for all of our past shows. Have a great week, everybody, and God bless.
You've been listening to The Real Estate Show on KMED AM and FM radio, presented by John L. Scott Real Estate of Southern Oregon, along with All Cities Property Management, the Home Builders Association of Jackson County, Ditech Mortgage, the Jackson Soil and Water Conservation District, and the Rogue Valley Association of Realtors. For guest information or to watch a past show, visit us online at realestateshoworegon.com. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED.